Hello everyone. Let's revise the important concepts under the chapter taxation. Starting with capital gains tax. You buy an asset, could be movable or immovable asset. You hold it for a certain period of time, could be months, it could be years, and you sell it in the market. Imagine you get more money by selling it compared to the price that you paid to acquire the asset. The difference between these two prices is called as capital gains. And on this, government will impose a tax and collect, which is called as a capital gains tax. Based on the holding period, there are two types. One is short-term capital gains tax and the second one is long-term capital gains tax. And please remember, from one asset class to another asset class, the rate varies. Second one, securities transaction tax. It is a type of a direct tax that is imposed by the government on the value of the securities which are traded on the exchanges. This has been introduced with the passage of Finance Act of 2004. This is there in the newspaper because of the changes announced by the government very recently. Third one, income taxes. The taxpayers such as you and me, the companies, etc., will generate revenues or the incomes through different sources. On all these particular sources, the government will impose a tax and collect under the provisions of Income Tax Act. Earlier, the Income Tax Act of 1961 provisions were applicable. The Government of India has recently replaced that with Income Tax Act of 2025. It covers incomes generated by individuals, companies, Hindu undivided families, etc. Next important concept, double taxation avoidance agreement. It is a treaty which is signed between two countries. The objective of this agreement is to ensure that there is no double taxation on the same income that is generated. That is, in simple terms, double taxation is avoided by signing this kind of an agreement. The taxes paid abroad, in certain cases, the credits are also provided by the country. The provisions for the double taxation avoidance agreement are under the Income Tax Act of 2025 under section 159. And this particular agreement could be comprehensive agreement as well as could be covering very limited number of sources as well. Another important concept is Advanced Pricing Agreement or APA. This has been introduced under the Finance Act of 2012. It is essentially a mechanism using which the transfer pricing issues in advance are resolved. That is essentially whenever the transactions are happening between the related parties, so that in the future there is no dispute in terms of tax payable by the companies. These kind of advanced pricing agreements are signed. APAs are entered into the Central Board of Direct Taxes with the taxpayers. These are the important concepts associated with the taxation.